Good morning and welcome to Jackrabbit Trader, where we teach you how to stop predicting and start reacting. My name is Steve, and in this video we're going to take a look at the markets and some stocks to watch for Saturday, September 23rd, 2017. Markets basically this week were unchanged for the most part. The one big winner this week was IWM, which has continued its strong V-shaped rally back to a new breakout. You can see we pulled back and broke out, but let's go through them one by one and take a look and see if there's any new information that we can use going forward. So the SPY had a breakout last week from this range between 248 and 241. That breakout has kind of stalled. We're at the point where some indecision came into play, where we opened the week opened at 249.61 and closed the week at 249.44. So slightly lower, but essentially the open is equal to where the close is, resulting in some indecision in the markets. And who knows, maybe this rolls back over, maybe we just consolidate, maybe it just continues higher. We don't know right now. All I can tell you is that we are in a breakout and we continue to make new highs. So from that perspective, you definitely want to be long than short, and you want to just ride the trend higher and see where this goes. The Qs again have kind of alternated weeks, where we had this nice breakout a couple weeks ago, then we've alternated down, up, down. So with that idea in place, maybe we have another up week this week, but you can see we continue to hit resistance right around that 146.50 area, with a new reference for, I guess, a stop. Or if you're trading just the Qs, you can see we've kind of just trailed this move higher over the last several months, and here you go, another new breakout leads to another higher stop, and you just kind of continue with that method until you get stopped out. And that's exactly what we do in the Jackrabbit Club. And if you're not a member of the Jackrabbit Club, you can head over to jackrabbittrader.com and use any of the email signups to become a free member. And we go into further detail into our actual portfolio, where I manage my real-time portfolio. And you can see exactly real-time how I trail stops and when I add to positions and when I enter new positions. So I think it's a good reference for any new trader or anyone that's struggling, just to see that it can be a very simplified mechanical method, with no real guesswork in play. And it's really resulted in, I think we're at like a 15 or a 16% gain on the year, which has outperformed the market which is around 10%. So again, you can head on over to jackrabbittrader.com or use the link in the description below to sign up. The diamonds, all right, the Dow, strongest out of all of them besides the IWM. Again, we had the breakout last week. This week, move higher, closed closer to the open. So again, another slight indecision in the market. But again, if you were trading the diamonds, you could then utilize a new reference point and trail that stop higher, and maybe even add to that position. But again, based on those three, the SPY, the Qs, the diamonds, were breaking out. And then finally you follow it up with the IWM, which looked like it was breaking down. We had this breakdown, and that quickly reversed. All right, so here you are, came right back down into support around 134, bounced off that level, and now you got to kind of rework your charts a little bit, because fact is you're still in an uptrend. So maybe we look at something more along those lines as our trend line. Again, it's always fluid, it's always moving. Just because you draw a trend line one week, new information or new candlesticks, they definitely frame your opinion going forward. So now here we are in a new breakout, where you look at this being the breakout level. Okay, and then you take this stop and you bring it down here. So in my opinion, the IWM is still in an uptrend as long as it stays over 134.77, which would be the closing low here. You could see it even double bottomed almost on these two bars here on 814 and 821. The low 134.12 and 134.14. So within 2 pennies of each other. And then sure enough, a move higher from that. So V-shaped reversals are difficult for to catch. That's why I really just I like to just stay in the trade as long as possible and see where it goes. Taking a quick look at the sectors, XLF back to the highs. We've talked about this before, where potentially this 2390 area can be some support. Again, let's reframe our trend line here, kind of make sure that we're hitting as many points as possible. All right, so there's a new trend line. Here's the new consolidation that we're in, and we can confirm that a breakout here over 2550, then you can use a stop under 2390. XLE has broken this downtrend line, this time fairly substantially, but you can see where has it gone? It's gone right back to the previous highs of this consolidation. So let's see, does it continue to work higher? Does it roll back over? Nobody's going to be able to tell you. Just got to watch the charts and see. XLI, strong week, nice breakout on the XLI. So again, there's nothing wrong with taking some of these ETF trades. If you want to get long the XLI, you can definitely do that, and you can use a stop right around 67 as your exit. So a close below 67 and you're out. But again, we're in an uptrend. All right, we continue to make higher highs, higher lows. The consolidations keep moving from the lower left to the upper right, and you can't fight that trend. Same with the XLB. We broke out last week from that range, and again, consolidations moving from the lower left to the upper right, in an uptrend. XLY continues to just move sideways. XLK, kind of similar to the Qs, where it's just moving sideways after that breakout from 4 weeks ago. The XLV had this nice breakout. We had a reversal signal last week with what they call a gravestone doji, where you moved up, didn't have enough buyers to support that price. Sellers stepped in, closed it lower, and then confirmation was a move back below last week's low. You could have used that to get short if you're, again, more of a intraday or day trader. But for us, I would still be long this stock, or this ETF, I should say, because we're in a breakout. Until that breaks below 78, I would still be long. So again, there's many different ways that you can go ahead and trade. This is what works for me. It keeps me in the trades for the long term, and you just have to withstand a little bit of heat every once in a while. XLP, we've talked about the potential for a head and shoulders pattern in the XLP for some time, where we have a left shoulder, a head, and a right shoulder, basically meaning a high, a higher high, and then a lower high. So a reversal signal is in place, and that reversal signal is confirmed on a break of what they call the neckline. The neckline would be this support area that we've drawn here at 54. So here we are, 54. 40 was broken. We're down to 53.92. You have this low in place around 53.85, but based on this move, you can anticipate a measured move from the head, which is 57.26, to, let's call it 54.26, just to make the math easy. So you're back out $3, right? So there's a difference of $3 here. You could also show it in this manner. Let's see if I could do this without screwing up. Cancel right extension on the trend line. So that's your measure, and then you use it from the neckline down. And of course, as with many things of technical analysis, it lines right up with that 5150. So that's an area that you would look to see some support, and of course, already drawn on our chart at 5150, you have some support. But that's just a quick and dirty measured move to see where this could potentially go in the XLP. Not saying that it's right, not saying that's going to happen, but that's just a lot of technicians will look at that kind of information and use that. So again, not my trade, but you could get short with a stop over 55 and look for a move to 51. A 2 to 3 risk reward, not my style, but some people it is. And finally, XLU breaking down but pulling right back to trend line support. Again, 51.48 would be my stop on that level, or on that ETF. Other than that, we're still in an uptrend. So that's where we're at with the stocks and the ETFs. Again, I know I went pretty quick through that because I want to get to our stocks to watch and not have a 50-minute long video. There was many different stocks we could have choose from. I didn't have a video out last week, so I'm going to hit on some that broke out last week, but I didn't cover, just to give you guys a heads up. So AOS broke out last week at 58.22. Could have got long there with a stop above 53, or a stop at 53.34. So again, you have an uptrend in place, right? An uptrend being where we can connect at least 2 lines. I prefer 3 to confirm. So you have 1, 2, and 3, and then sure enough, the 4th one, it is a product of this initial trend line. Move down. We've reversed, now breaking out to new highs at 58.22, and this week continued higher. So a good position there if you were able to catch that. AXP again broke out last week. This one's a little bit of a tighter situation, but you can see trend line in place. So I had 2 points, and I'll actually just show you what I'm talking about. Let's remove this. So fact is, let's just, for argument's sake, say it looks like that. So we're going to connect 2 points, right? So 2 points is great, but 3 points confirms. So we drew that line in place, and then as the stock continues to work, phone call. As the stock continues to work, let's see, it works and works and works and works and works, and then sure enough comes right into support, being that trend line, breaks out higher. All right, so just because it only moved sideways doesn't mean that it's not a valid trend line. Okay, it doesn't have to pull back to hit trend line. It could very easily just consolidate, move sideways, and break out higher. All right, so here we are, AXP breaking out, and I would say if we zoom out just one more year, let's go to 4-year weekly. Let's see, we have some resistance in play, probably actually not until this 93, 94 area. All right, that's where I would see the next level of resistance come in, and that's really from this range over here. You can see you have some resistance there, or some support there, and then I would say your resistance is up here using the 3 or 4 points from, let's see, that's 2013, 2014. So again, just kind of frame everything, keep it in mind. But for the way I trade and the way I teach in the Jackrabbit Club, we just get in and we ride them, and that's as simple as that. Citigroup following suit with those financials breaking out this week. You can see we've talked about it previously in the past. Had a nice breakout. All right, so what would have happened on this trade would have been, if we got in, say, in June, we would have got in, our stop would have been 57.68. All right, you let the stock work, you let it set up a new consolidation, and then you wait for a new breakout. When you get a new breakout, there's 2 very simple steps you need to follow. First one is you trail your stop higher, okay, to the new support level, just as if it was a brand new trade. So if this is your pattern, or whatever your pattern is that you're looking for me, it's a consolidation and a breakout. You wait to find more of those same exact patterns in your stocks that you're already in. All right, so that would have been this case here. And then you resize your position. So essentially, just as you would have done here, you would have used 64.50 to 57.50 being your stop. That sizes your position. And then go again. Now you're at 71.30 to say 65.30. All right, if that results in a higher position size than you already have, then you add to the position. If it doesn't, then you keep the position you have on. So you're never adding more risk, but you are always adding to your winners. All right, you're trying to add to your winners as much as possible, and that's really what kind of dictates that outperformance, is adding to the winners. I never add to losers. It doesn't work. You add to the winners, and that's the simplest way that I can describe it to you. That's the only way I do it, is you just very simply find the same entry patterns that you've always used, and then size your position as if it was a brand new entry. You take that new position size, you minus your existing position size. So say you have to, you should have 100 shares, but you only have 40, whatever it is, then you're going to add 60 shares on to this trade. And that's how you add to your winners, but you haven't even increased your risk. Okay, you're always risking the same amount of money, whether it's 1% of your portfolio, 2%, 0.5%, whatever you're comfortable with. That's how you go ahead and add to a winner. Hylton breaking out to new highs, stop right here around $60. You can see it's had a pretty extended run into that move. So this is one that may potentially fail, roll back over, kind of maybe goes up another week and rolls back over, but it is a breakout nonetheless. Just understand that you are buying after a lot of buying has already happened. So you may be late to the trade. Just means you may have to withstand some pullback before it gets going again. HON, all right, nice new breakout. Stop 134.89, call it 134.50, whatever. But again, size that position accordingly. This is a great looking trade, honestly. This is one that if I had some cash available in my accounts, I would probably be adding based on just the pattern. I love these tight consolidations. I love just these grind higher stocks. I don't want to see a lot of movement. It makes it very difficult to stay in them. Keeps your position size super small. So even when you are in them for a while, your P&L, your return is not huge. These are like ideal for me. So unfortunately, I don't have any cash to put to work. We've pretty much been fully invested for the last several weeks after a slight reduction in cash on the market pullback. Maybe I think it was either last month or the month before. But we're back to full cash or full 100% invested. But again, this is a great one. And if we were going to take it, like I said, you would take your stop or your entry price, which is 141.75, and your stop, let's say 134.75, which is like $7. And then whatever you want to risk, if you want to risk $500 in the trade, or just let's make it easy so I can do the math in my head. If you want to risk $700 in the trade, which is actually risk, what you're willing to lose on that trade, then you would buy 100 shares. That's as simple as I can make it. And that's how you correctly size your positions. HPQ, another great looking setup. Stop again, or I should say consolidation again, nice and tight. All right, grind higher, breakout to new highs over this 1957 area. You can see no resistance in place, and your stop would be right around that 1839. So again, if we had cash, this would be a great position to add into it. All right, breaking out over 142.50 and stop right here around 131. And the way that we're drawing, we'll look at it on, let's go back to Honeywell because it's probably an easier. Actually, let's go to HPQ because it's probably really easy. No, let's go back to Honeywell. The way I'm drawing these consolidations is not, if you, we'll use this one as an example, we'll clear the whole set. So the first thing I want to do when I look at a stock is I want to find the trend. All right, so I find the lowest point. All right, then I find the next low, and I snap it in. All right, and you can see that this consolidation basically came right back to trend line. I didn't find that. It just was a nature of drawing the trend line. So then we'll adjust a little bit to make it meet. The next thing we want to do is find the consolidation. All right. And what I do is I just go back to the latest high, all right? Because I know my scan is always finding me new breakouts, all right? And if you want to see that scan, I think it's my second or third Jackrabbit report. So if you go to jackrabbittrader.com, check out the reports, and I think it's either the second or third. It's like starting 5 ways to get started in the stock market. I think, like I said, it's either the second or third Jackrabbit report, but you'll see my scan settings, and essentially what it is we're just it's always returning to me new weekly highs over the last year. All right, so new 52-week highs over the last year. Stocks that are in the S&P 500 that have 1 million shares traded and maybe, I forget, have a dividend yield or something. But regardless, whatever your scan setting is, I know it's always returning new highs to me. So what I want to do is I want to always, from that new high, I want to go back to the latest high, which would be right in here. Let's zoom in. Which would be right in here. Okay, so I'm going to find the highest closing high, and then I'm going to find from that point the lowest close, all right, which is right here. And I'm just going to draw a rectangle. All right, so it's really not any more difficult than that. You know, you could do it here. All right, so here's a breakout. Where's the highest close? Well, it's right back in here. Where from that point moving forward, where's the lowest close? It's right here. And you draw it. All right, so I think that's really important on how you draw your consolidations, because that kind of always keeps you in check with making sure you're using the most current information. You know, I could very easily on this one say, let's find another one that's a little bit, let's go actually to Monsanto, because I think that one has some. Yeah, so for argument's sake, I could always go back and say, okay, well, the highest close is all the way back here, and the lowest is here, you know, and here's the consolidation. Well, yes, but you could also, if this returned on my scan settings, you could really just say that this is a consolidation, right? And that's where your stop should be set, not all the way down here. All right, so again, it's just something you have to do more and more, and hopefully by seeing my videos, it helps you kind of understand where those are. But regardless, Monsanto breaking out to new highs. I don't know why it went sideways for so long. I don't know if it was in some kind of news or anything, maybe being taken over. But you know, here we are breaking out. So just double check that if you're going to get into this, that it is actively trading, and you're not just going to sit here for another 8 weeks of sideways. But that stop would be 116.50. TROW. All right, here you can see one high, two highs. All right, three highs, and sometimes if I see that, I'll use those instead of like the actual close. If I see a bunch of wicks in that same area, I'm going to consider that to be the resistance for whatever reason. And again, TROW breaking out, a stop would be 81.90, and again, you're along this uptrend line. So different ways to look at things. And here, you know, this is kind of an example of where you can draw potentially two different trend lines. All right, so I have this in place. This was breaking out last week, TXN, and breaking out to the upside. Had a nice follow through week. So I've drawn in this consolidation here. But there's nothing wrong with drawing this consolidation either. Right? That's still a very potential valid trend line or consolidation. So again, it's all about the way you interpret things. There's no right or wrong way to draw a consolidation. There's no right or wrong way to draw a trend line. In my opinion, you should have 3 points, but there's no wrong way to do it. You know, some people may draw the trend line like this. That's not wrong. All right, and we'll remove this one. You know, that's not a wrong trend line. It's just, for me, I like to have the I don't know if I can go back. There we go. Oh, wow, I didn't know I can do that. So again, just kind of develop your own. I guess what I'm trying to get at is develop your own system. Use mine as a guide just to see how methodical I am with how I do things, and you know, the profits will follow. It's just being consistent in your process and moving forward each and every day with having a plan and knowing what you need to do. I think is important, and it really changes the way you trade, because it takes all the emotion out of it, and you just have rules. You know what you need to do, when you need to do it, and how you need to do it. So other than that, have a great rest of the weekend. I hope you guys enjoyed this. If you did, leave me a comment in the comment section below. Give me a thumbs up, whatever you want to do. Just give me some kind of feedback to know that this was helpful. Other than that, again, have a great weekend, and we'll catch you next time. Take care.